Jonny Bell from Housemark Properties. Welcome. Thank you very much for joining me today. It's always a pleasure to see you. We're going to talk about end of financial year and property investors and what a crucial time it is. I know in my business, I see a lot of investor activity in the months leading up to June 30. So I would love to spend today talking with you about your insights and what you're seeing in the market at the moment, and some red flags for investors and what investors should be doing in the lead up to June 30 to maximise what they get out of their investments, and if they're looking at putting more money into the market, what they should do, because it is, as I said, a very, very crucial time. So Jonny, just to start, tell me a little bit more about your business, because you guys are a rentals only business, which I love, and we refer a lot of our clients to you because you are property management specialists. How long have you been in business for now?
Yeah, thanks for having me, Joe, my resident in Mermaid Beach. But I've been running Housemark for 7 years now. So I started it in March 2019, and we've had an amazing growth journey. And I think the fact that we only do property management, and our whole vision is turning the ugly kid into the cool kid of the industry and putting limelight on property management, because so many businesses are real estate businesses that focus on sales, and property management is a part of the business that doesn't get the love and attention and that it should be getting. So it's what we've spent our time on, and we've grown from 0 to 3,500 managements over the last 7 years.
Wow. Congratulations.
And yeah, it's been an amazing journey, and I've been very overwhelmed by the feedback from our landlords that they appreciate someone who actually focuses on them and helping them get the best returns. So I'm really excited for today's episode.
Yeah, that's awesome. I know, over my years of being an investor and working with clients, property management has always been, the bugbear of all investors, to get that good, consistent management where you're getting that, great communication, quality tenants, and, the cash flow, money in the bank at the end of the month. That's what's really important. And having that security of knowing that your investment is being expertly managed. And, when you're dealing with some of the big sales agencies, property management does tend to be the poor relation, and you don't get a lot of that attention. So I think that is my big appeal to you guys when I'm referring clients and for my own properties is, having that specialist who only does rentals, and that's what you're focused on.
100%.
So how did you get started in property management?
I did about 6 months at a Ray White office.
In Brisbane?
In Brisbane, in Albion, and had some fun over that 6 month period. And I was basically just in a boardroom calling landlords, trying to convince them to come to Ray White at the time. And that's where I really saw an opportunity. I was like, wow, like this section of the industry, no one talks about, no one cares about. Most business owners in real estate are selling principals. They put a team leader in the property management division and hope for the best. And as an industry, property management, 1/3 of our country are tenants, and the Australian dream is to buy an investment property and to build wealth through property. It is always has been, and I believe always will be. So we play such a pivotal role in both making sure that tenants are comfortable and also helping landlords achieve financial security. And that's why I love our partnership, because you're helping them buy investment properties, and then we're helping make sure we maximize their returns.
Yeah, and make sure that dream of an investment property doesn't turn into a nightmare, which it does for so many people. Yeah, because there are so many pitfalls.
Yeah.
So tell me about the first property management that you got when you started your business.
Yeah, we were talking about this offline. I was playing golf at Royal Pines, and I got a call from a client who said to me, "Hey, I'm ready to go ahead." And this is after 3 months of no income. I was 3 months of cold calling, and finally I got a property in Redcliffe on Marine Parade, and the landlord Grant called me and said, "Hey, I've seen your proposal. We're happy to go ahead." I literally put the clubs in the back of the cart, drove to the golf centre, and then got in my car and raced to Redcliffe and signed him up. And probably the coolest thing is Grant, 7 years later, now works for us.
Oh wow!
He's a leasing manager for us. So
Fantastic.
he bought an apartment. And did really well off that apartment, and we managed it. And he was watching this growth journey. He was working at the bank, and then he called me one day and said, "Can I be part of this?" Which is a really cool story.
That's a great story.
Yeah, 7 years ago, we rented it. I'll never forget, $320 a week. It's now getting $800 a week in 7 years. So like the growth has been incredible.
Fantastic.
Yeah.
That's a great partnership and great story, testament to your business as well. So thinking about the current market, what are you seeing in the market at the moment with regards to property management and investors?
Yeah, it's an interesting time at the moment, isn't it? Like we're protected I know a lot of people are at the moment a bit nervous about what's going on with the war and inflation and uncertainty. Like there's a lot going on. Interest rates, the potential changes to CGT. But for us, we've never been busier. Like the rental market is flying. And I think that it ultimately comes down to supply and demand. There is not enough supply of rental properties across Southeast Queensland for tenants. And we're continuing to see year-on-year growth. Properties are being rented in a week. It's actually quite sad, some of the stories we hear about tenants. They cannot find accommodation.
Scary.
Yeah, but yields are actually improving. Like we're seeing the yields, because property prices went up a lot, the rents have also gone up. So yields are really strong. And it's a really strong time for landlords at the moment.
Yeah, interestingly, from the buy side, we're certainly not seeing any pullback from people looking to buy investment properties. In fact, quite the opposite. Where some people might be inclined to sit on their hands because of the uncertainty around interest rates, and they're saying we might get a couple more rate hikes in the next few months. The uncertainty around what's happening in the Middle East. The smart investors are actually saying, great, less competition. While let those people sit on their hands, we want to go, head forward, and buy now. Whilst there is, those people that might be sitting on the sidelines, less competition, great time to buy. And as you say, demand is still high. We did we rented a property through you guys a couple of weeks ago. 34 inspections, first open, it rented for full asking price in one inspection. So that demand is there, and they're not balking at paying the asking price on rentals. So it is a perfect storm for investors.
100%. I think it's by far the best asset class at the moment. When the amount of uncertainty, and you see what the stock market is doing at the moment, and then commercial property, like if unemployment rates increase because of AI, and if what's going on in the world from a technology advancement point of view, I believe the safest investment is residential property at the moment, and you've got a guaranteed income. Like it's hard not to rent your property at the moment.
Yes, yeah, absolutely, and vacancy is super low. So thinking about end of financial year, do you see every year an increase in investor activity in the lead up to end of financial year? Do you see more people buying and settling property and trying to capture on the time of year around tax time and end of financial year?
Yeah, 100%. Especially this year, like you said, the savvy investors are really going after it at the moment because they're seeing an opportunity to buy without as much competition as normal. So this year especially, and also people who are wanting to buy and then have improvements to the property for tax reasons. I'm not an accountant, but it seems to be people on higher incomes who are wanting to negatively gear property and be able to do some repairs to property. Now's a perfect time to buy.
Looking for those immediate tax deductions. So just how competitive is it out there at the moment for if you're a tenant looking for a property?
I think we've become numb to it because it's been going on for the last few years. But if you were overseas and you came to Australia and then you came to Brisbane or the Gold Coast and you saw how tight it was, I think you'd be gobsmacked. But I think because everyone's so used to it now, ever since COVID, we have seen year-on-year growth and we have not seen the rental market ease whatsoever, which has been incredible. So to give an example, like your story that you just told about the 34 tenants, that's not one occurrence. That's any really strong property that hits all the fundamentals near the schools or on the Gold Coast, closer to the beach, it's got new carpet, new paint, good landscaping. If they tick those boxes, they are renting in days. And it's actually, like I said, it's hard not to rent them at the moment, and the yields are strong. So yeah, it is extremely competitive, but I think as an industry, we've got used to how busy it is, but it is definitely not normal.
And from a numbers perspective, what is the vacancy rate at the moment? Because there's a few numbers that are bandied around.
Yeah, I'd say it's less than 1%. I think the most reliable stats say 1.3%, but I think that's continuing to come down.
And Brisbane, Gold Coast, or is there a difference there between the two cities?
Pretty similar. I'd say the Gold Coast is tighter than Brisbane. So I'd say Gold Coast is less than 1% and Brisbane would be 1.2 to 1.3%. But like I said, it depends what you read.
Yeah, and all of the property experts say anything less than 2% is considered dire.
Yeah.
You know, so at 1%, you know, that's a really compelling story for investors because you know that you're going to get a tenant and you can be selective in terms of what tenant you accept into that property as well.
100%. And I think also there's not like there's a huge amount of supply coming. Like it's expensive to build at the moment because investors, because of the uncertainty at the moment, so, like we had the most amount of investors sell last month. They sold their property with the most amount last month. So as this uncertainty increases and interest rates go up, if investors sell, there's less stock for tenants, which then drives rents up again. So we're seeing a reduced amount of stock, which then means rents are going to continue to go up, which then again benefits it's unfortunate for the tenants, but it's great for the landlords. Yeah.
And are there any suburbs or pockets that you're seeing particular growth in right now?
I mean, Mermaid Beach will always be. I'm biased because I live in Mermaid Beach, but I think anywhere that is as close to the beach as possible, near schools, near amenities. So you've got Mermaid Beach, Miami, Burleigh, Palm Beach. You've also got like Labrador, those communities, Robina. So anywhere that's near a community and also beachfront is where we're seeing a lot of growth.
So those suburbs that are well serviced with infrastructure, close to schools, they'll always be in demand.
100%. Where are you seeing a lot of growth?
Same. Those areas that are close to CBD, so Southport, which is driven by all those people who work in the law courts, in the Southport Health Precinct, the international schools. Those suburbs will always rent well because there'll always be high demand there. Beachside, so any of the beachside suburbs, people always want to live by the beach, and suburbs that are well serviced by public transport, close to schools, close to infrastructure. Robina, for example, that's a planned suburb that is well serviced by infrastructure, and it always rents well. So any suburb that is well serviced by infrastructure or beachside, I think always performs really well.
100%.
So why do you think this is such a critical time in the lead up to end of financial year for investors?
Right now, you have an opportunity to be able to have an instant tax deduction on any repairs that you do to a property. So there's a difference between a repair and an improvement. So an improvement is a depreciation, a repair that you get an instant deduction for. So right now, if you've got tenants that are wanting repairs or there's things that you can do to your property, right before the 30th of June is when you should get them done, because then it will be in the 2026 financial year tax return. Rather, if it's on the 1st of July, you've then got to wait 12 months to be able to get that benefit. So it's a really good time to do your gutters, repair your air conditioning, do the servicing, do a house wash if you need to. So right now is a good time to be able to do those repairs and do as many of them as possible without going overboard.
Yeah, absolutely. So for people who are looking to buy now, is the opportunity to maybe do a repairs-based renovation, coat of paint, carpets, curtains, blinds, and then get that immediate tax deduction?
100%. And I think you just have to be strategic, because I'm not an accountant, but you need to be strategic on how you do those repairs so it is a tax deduction instantly.
Yeah, so I always advise my clients, and one of the things we specialise in is buying undervalued assets that might be a bit tired, that you can put some work into, and I'm not talking anything structural. White paint forgives a lot of sins. Fresh carpet, new plantation shutters, sheer curtains, and maybe changing out some lights, makes a property feel really fresh and clean, and it doesn't take a lot of effort. So those are the sorts of things, that I think is investors can do in this lead up to end of financial year to really maximise their returns.
100%. And they're the things that increase the yields. Like if you redo the carpets, you make sure you've got the paint up to date, the landscaping looks good. Those little things, and they're not expensive, make a massive difference to the returns that you will get.
Yeah, I always tell my clients, if you do those things, you'll attract a better caliber tenant who's more likely to stay, and you'll get a better yield.
100%. Yep.
Thinking about from a tenant's perspective, what are you seeing in terms of tenant behaviour? What changes are you seeing in the current environment?
For us, because everything is instant now in society, tenants are expecting to be responded to faster.
Right.
So like the likes of Uber Eats, you can get food delivered to your house in 15 minutes. Everything's instant. ChatGPT, you can get a response to things in seconds. So from a business point of view, I would say that tenants are more demanding in regards to wanting responses faster. So it's really important that for us as a business to adapt to that and make sure that we've got instant replying. We're replying to all of them within 24 hours. We're getting trades there within a period of time that's acceptable. So tenants know their rights. They're more accessible, and they will exploit their rights if you don't manage them correctly. So I think it's really important as a landlord to make sure that you've got a property manager, or make sure that you're being proactive with that tenant, because they are more demanding, and also because the rents have gone up. A lot of tenants are expecting more, and they're expecting a home to be at the level that they want it to be, and fair enough on some cases. So I think for us, it's making sure that we're communicating proactively, we're getting trades out when required, and we're making sure that the property before the tenant moves in is rental ready. Everything works, the aircon's good, and that first impression is so important because it means that you get that tenant on side for the period of their lease.
Yeah, right. Okay, that's great tips for investors. So from a property management perspective, what separates or differentiates a great investment property from an average one?
Yeah, a good example is a house that's 4 bedroom and 1 bathroom. So that will typically attract younger students who are happy to share a bathroom. A family would typically want a 4 bedroom, 2 bathroom house. So too many bedrooms and not enough bathrooms is a good example. A property that isn't landscaped well, so it's got it will put off families. So what I say to investors is, what would you want if you were moving into a home with your family? The second part of that is, what is the style of tenant that you're looking for, and what do they typically want? They want an aircon in the master bedroom. They want ceiling fans. They want to have robes. They want to have new paint, new carpets, and they want to have enough bedrooms and bathrooms for the family. So a 3-bed, 1 bath is a lot harder to rent than a 3-bed, 2 bath.
Right.
A 5-bedroom, 1 bathroom is harder than a 4-bed, 2 bath. So it's making sure that the orientation of the house and the amount of bedrooms to bathrooms fits into what you would want as a style of tenant, which is typically your family is what, a stable tenant you're looking for.
And one of my tips to my clients is always 2 living rooms.
Yes.
And a big outdoor space. Like if you've got an outdoor area, if there's a pool at the property, a lot of properties on the Gold Coast and Brisbane do have pools. That indoor-outdoor flow is really important.
100%.
And a separate living area where they can put the kids in to watch TV while they might be entertaining.
Yeah, makes
a huge difference.
Makes a massive difference. And like another example is a main road. It's always harder to rent a property on a main road with the, on the back of a train track. Like that's always harder. So making sure that you're not buying properties that are on main roads, on train tracks, or have something, in a flood area, making sure you find the good foundations. Like you said, they've got 2. If you can find something with 4-bed, 2 bath, 2 living rooms with a nice outdoor area, you're winning.
It's gold.
Yeah.
And are there certain property types or price points that are outperforming at the moment?
I mean, I'll speak to my property. I just rented a 2-bedroom, 1-bathroom unit in Burleigh, my apartment, and it got $850 a week.
Wow.
And it's actually not even a proper apartment. It's sitting underneath, like it's a house that I've split into 3 units. Upstairs, which is a 4-bed, 2-bath, is getting $2,200 a week.
Wow.
And then a 1-bed, 1-bath studio is getting $700 a week. It's incredible. So like anything up to $2,500 a week, as long as it hits those fundamentals we spoke about today, flies off the door. Anything over $2,500 a week, it's just it's not that it is harder to rent. You've just got a smaller pool of tenants,
Right.
and so typically it's just a timing thing because you got less people who can afford that amount of rent. It might take you an extra 2, 3, 4 weeks to actually lease it because it is a little bit of a timing and luck thing. You've got to have the right tenant at the right time.
Yeah. So what about properties up to sort of say 1,200 a week? Are you seeing like, once you drop off over, are you seeing people drop off or inquiry drop off once you hit over say 1,200, or is it $2,500?
Yeah, I'd say up to 1,200 is extremely hot. Between $1,200 to $2,500, like you'll lease anything from 0 to 1,200 is leasing in a week. From 1,200 to $2,500 is leasing in 2 to 3 weeks, and then $2,500 plus could take you 3 weeks plus, based off how competitive the pricing is compared to other properties on the market.
Okay. And seasonality wise, winter is usually a quieter time in the rentals market or the property industry or the property market overall. What are some of the risks that investors are facing at the moment that you see?
Risks that they're facing I would say it's less about the timing of the property. It's more about making sure the property is rental ready. So now if your property is not rental ready or it's not livable, the tenant, when they move in, can bring the keys back to the agency and say, I'm not moving in. So it's actually making sure that the biggest risk is actually making the property not being compliant, making sure the smoke alarms are done, making sure you service the air cons, making sure the keys to all the locks work. The little things are probably the most important things to make sure that you don't get yourself in a dispute with the tenant. And then also making sure that your property manager is timing the lease. So most people think you have to do a 6 or 12-month lease. You don't. You can do a 9-month lease, an 8-month lease. So you're actually better to time it. So if you lease the property in June, let's say you buy in before end of financial year, you're leasing it in July, my recommendation would be doing a 9-month lease or an 18-month lease.
Got it.
Because then you're timing it so the lease is up in January, February, which is a hot time, or in September to November, which actually makes it a really strong period for the next time you lease it out.
We mentioned before, property management plays such a huge role in the success of investing in property. What are some of the things that investors should look for when they're choosing a property manager?
I mean, I'll always say a specialist. If you go to a GP as a doctor, you're going to get a generalist. If you want really good advice around a certain part of your body, you go to a specialist that specializes in that. So you're not going to your GP for heart surgery. So I think for property management, it's finding someone who is localized, who specializes in that area, that specializes in property management. You'll be able to tell as a landlord straight away if that real estate office puts emphasis on property management. I think it's very easy to be able to tell. That's number one. Number two is making sure that someone is financially invested in that business that you can speak to. Because what I say to landlords is, in property management, something will go wrong. It's not if, it's when. There will be a tenant over the next 10 years that isn't the best quality of tenant. The tenant will be in arrears at some point. There is going to be an urgent maintenance request that we're going to have to overcome. So it's actually having someone that you can call on if something goes wrong and you trust that they're going to be able to fix it. So I think that's really important, to find a property manager or a head of department or someone in that business that you can call anytime and say, please fix this. I think that's a really pivotal part. And then number three is interviewing the property manager. A lot of the times you'll speak to the BDM, they'll sell you on the service, they'll lease the property, and then you get handed to a property manager and the experience is very different. So it's actually making sure, okay, you're my BDM, you're going to get me the best rent, but who's my property manager? And I want to have a conversation with them first. So they're probably the three key pillars to make sure that you've got a property management company that will be with you long term. I always say real estate sales is the one night stand.
Yeah.
Property management is the relationship. You're going to be dealing with this person for the next 10 years. So you've got to have a relationship. You've got to like and trust them.
So key to the success, right?
100%.
So what separates a good property manager in your business to an average one?
I mean, number one is they care. Like, they genuinely care about the outcomes for the clients. they've got extremely good attention to detail, and 3, they actually understand property, they understand investments. So you don't want the hot water system to blow and the property manager send out the wrong trade, right? Because that's going to cost you money. So it's actually making sure that you've got someone who understands construction, understands building, understands property with a really good attention to detail. And if they care as well, then you've got a very strong property manager.
Okay, so thinking about investors who are looking to buy now before end of financial year, what are some of the things that they need to have in place before they even start going out to look at property?
I mean, you'd probably be the best person to answer this, but I'm assuming finance, making sure that they've got a rental assessment and making sure they pick a good buyer's agent, right?
Absolutely. Look, I think from my perspective, it's understanding the market, understanding the growth segments, understanding those areas in the market they're looking at that they're going to maximise their yield, understanding what are their buying parameters, understanding what are the types of properties that are going to net them a really good yield, like we mentioned before, multiple bedrooms, 4 bedrooms, 2 living areas, multiple bathrooms, so you can attract that long-term tenant, and also having an understanding of what they want to be able to do to a property and therefore deduct before end of financial year is what I always tell my tenants. It's what I always tell my my buyers. Have that strategy set in your mind before you even set foot at a property inspection.
100%. And like one thing I get to see is people who choose a good buyer's agent, like yourself, seem to always get a better outcome than the people who do it themselves. And it's because the buyer's agents actually know they have a relationship with the agents. They know the right person to organise the building and pest. They know the right real estate office to be able to manage the property. So they actually are a little bit like a concierge, where they actually make sure they get the right property. They make sure they negotiate it, but then they're also making sure that that person's partnered with the right people moving forward. And it seems to be, for us, a much more seamless journey for the client rather than when they do it themselves.
Yeah, and I think when we're looking for a property for our clients that is specifically for investment, we always look to buy undervalued assets where we can improve the value and then therefore their equity in the property really easily and quickly. So I mentioned before, white paint forgives a lot of sins, new carpets, that sort of thing, where you can add value really quickly. Some people just can't see past, tired walls, bad lighting, old carpet. It might have a bit of a smell about it. We love those assets because we know we can turn them around really easily, improve the value of them by just doing a light makeover. I'm not talking about kitchens and bathrooms and that sort of thing. That's a bigger renovation. But looking for those undervalued assets where you can build immediate equity, get a really good tenant in there at a really high yield, really strong yield in a growth pocket, is really gold, and that's what we specialize in. So thinking now about cash flow versus growth, what's your view on units versus houses in terms of particularly yields?
I think if you're finding the right asset class, you don't have to compromise one for the other. I think there is an opportunity at the moment to be able to have both, especially on the Gold Coast. So personally, when I look, I like to try and find something for myself that has good growth, but is not going to be too far negatively geared. I want it to be close to neutral as possible. I think if you're buying multiple investment properties and the cash flow, you're negatively geared on all of them, you're going to cap out. You're going to get to a stage where you can't afford all of them. So I think making sure that you're finding good growth pockets, but also not, I think a lot of people undervalue how important yield is. I think a lot of people are all about the growth. They buy one investment property and then they buy 2 and then they go, I can't afford the third. It's too expensive. So I think that the neutral cash flow, positive cash flow is when you can actually start building a portfolio. And all of my clients all of our landlords that have multiple properties very much have a yield property portfolio, but are all in extremely strong growth pockets.
Yeah, so, the old myth was always you either get growth or yield, but never both. And I think, in the market that we're seeing now, particularly within a certain price point. So I sort of advise my clients, there's a sweet spot there between sort of 850 and 1.2 million, where you get really good quality assets in growth pockets combined with a yield. And we're buying at the moment on around about sort of 5% yield in that segment, and we're acquiring some really good assets for our clients. I also think that the myth that houses developed always delivered growth, units, yield. So it was either one or the other. And what we've seen in recent years is units are delivering really good growth. In some markets, stronger growth than houses.
Incredible.
But the yields are still really strong as well. So, sometimes when we get a brief, I get investors and they say, no units, I just want houses, I just want the growth. What we've seen is units are delivering both.
100%. Yeah. I mean, I think that's an old school way of thinking, is units can't deliver growth. I think we've both seen that units have been flying, and replacement value, because properties are so expensive to build now and units are so expensive to build, the replacement value of those properties are so high. So it set a new benchmark for so many units across the coast, and it's all been driven by the undersupply of stock for tenants and owner-occupiers.
Yeah, and I think, a lot of investors have always balked at body corporate fees and paying strata. What I always remind my clients is included in that strata is your insurance.
Yeah.
You're not paying for building insurance. When you buy a house, you're paying up to, $5,000 a year in insurance. You don't get that with units because the strata covers that insurance cost.
Yeah, and you also can't compare Brisbane to Gold Coast to other locations. Gold Coast, it's much more acceptable to live in a unit than other locations. So it's not an unusual thing for people to bring up a family in an apartment on the Gold Coast. Whereas in Brisbane, it's more of people who live in Brisbane more want the house and the white picket fence. So I think it's also, you got to look at what location are you in, what demographic are you attracting, and that also should mean that you don't have just a no units or no houses approach.
Yeah, and I remember when I grew up in Brisbane, and if you didn't have any money, you lived in a unit. It was always preference to live in a house. Whereas now there's a huge societal shift. People don't want to live in houses. They don't want to be some people don't want to be out in the suburbs. They want to be in the city. I remember when I was growing up in the suburbs, and I used to watch TV shows and, that lived in Park Avenue in this glamorous apartment in the middle of New York. And I was like, that's where I want to live.
Yeah.
I don't want to live in a house in the suburbs. Yeah. And that's now happening. People are forgoing the house and the garden to be more central, closer to the beach, closer to the shops, walk to cafes. They don't want a house in the suburbs.
Yeah. I mean, I went to the Mondrian, and there's a QR. The Mondrian's a big hotel on the Gold Coast for anyone who doesn't live on the Goldie. There's a QR code in the apartments where you can order the restaurant food to your apartment. Like, how cool is that?
Fantastic.
All your washing's done. Like, it's a whole nother level of apartment living.
Yeah.
And it makes living in a house, detracts away from living in a house.
Yeah, and particularly, the sorts of buyers we're seeing on the Gold Coast, people are looking for a lock-up. They want to have something that they can enjoy, over the summer, lock up and leave and, go for the winter. And apartments obviously really suit that purpose. We're getting a little bit off track now with investors, pulling it back to investing in property. What are the biggest mistakes that you see property investors make?
Two things. They buy a home without a good buyer's agent, and then they don't use a good quality property manager. It's the DUIs, do it yourself. They think people spend more time researching what car they're going to buy than what house they're going to buy.
Wow.
It's incredible. People just think that they go on realestate.com.au, they put a price range of 850 to 1.2, and then they pick the first three. They go to 3 open homes and they pick one. And the agent then talks them into paying 200-300 grand over market value. And they've never done it before. And it's sad to see, because it stops them from building a portfolio, because they're going backwards for years. And then they try and manage it themselves. They pick a poor tenant who's already on ticker, which is a a site that stops, you can put on with tenants that are dodgy. So they try and rent it themselves. They don't manage the smoke alarms. And so they've got this poor investment property attracting no money, and then they're just going absolutely backwards. So they've overpaid for it, and then they found a shitty tenant. So for me, it would be partnering with good people. It's no different. Property investment is no different to running a business. You need good people working for you. You need to make sure you've got the right accountant. You've got to make sure you've got the right finance broker, buyer's agent, and property manager. Build your team and let the team do what they do best, and go from there. So I'd say that's the biggest thing that I see is people don't spend enough time. They either try and do it themselves with no experience, or they don't pick the right team.
Yeah, and I think that's crucially important. So from your perspective, what are experienced property investors doing differently in this market?
Experienced property investors are making sure that they are getting the yield to growth correct, I think. Like they're very much making sure they're not buying something, a big block of land, unless you've got a lot of cash that you can put in, a minimal loan. Buying a big block with a lot of holding costs with not much income is something that I don't see those savvy investors doing at the moment. The second one is the Warren Buffett. They're fearful when others are bullish, and they're bullish when others are fearful. And right now, good property investors are going after it because there's less competition. Like I don't think there's a better time to be buying over the next 6 months whilst there's so much uncertainty. I think good investors are licking their lips saying this is game time. Like this is when you make the money in property. You make money when you buy. This is the time to do it.
Yeah, that's always my philosophy. You make money when you buy well, you make your money on the way in. And I agree with you. There's going to be some great opportunities over the next 6 months. And my clients who are investors are all full steam ahead. They want to buy now while there is a little less competition.
Yeah, there's a investment chat I'm in, and every day it's people saying it's time to go. They're licking their lips. They're saying this is game time. Like this is when you go. So it's always harder to do it whenever there's all this uncertainty. But I try and tell myself the more uncertainty on the news, the more change, the more legislation that they're trying to change. All of this, how good is that? Because the open home numbers come down, and this is when you get the deals.
Yeah, exactly. And coming into end of financial year is a great opportunity to acquire a property, do some work to it, get it market ready, get a great tenant in there, and get those immediate tax deductions.
Yeah, without competition. Like you couldn't ask for a better time.
Awesome. Jonny, thank you so much for coming in. It's always a pleasure to chat to you. I love our chats. So thank you very much.
Thanks, Joe.